Hello, everyone. Hello, everyone. Again, this is Tim McKenzie. Welcome to Stocks Talk Live with Tim. I know it's been a while since I've been on, and I'm here for just a few moments to talk to you about something that some of my followers has been asking me to kind of get online and make something uh, alive so that they can try to follow me better rather than trying to read a text message or a phone call, so you can go back and constantly look at it if you so desire. Again, this afternoon, I'll be talking to you about how to save money on your mortgage or your car payment. How to save money on your mortgage or your car payment, which basically are the same. They're the same way. So I won't talk about both at different times, but both at the same time. How do you save money with your mortgage or your car payment? Now, I'm going to give an example. I'm going to give an example, and then go ahead and tell somebody that we are live. Go ahead and tell somebody we are live. What's up, CJ? We are live on Stocks Talk Live with Tim. Again, we're not talking about. I don't think I'll be talking about stocks tonight. I didn't even check the market today. As I'm looking at it, the market for me didn't do too well today, so that's not what I'll be talking about. But again, just talking about how do we save money on our mortgage or our car payment, so that we, number one, paying off our mortgage early. For the most part, now I'm going to use some average numbers. Okay, so some of you that are watching, your mortgage might be more, it might be less, but let me use an average number. Um, so my average number that I'm going to use is $500,000. Now, some of you, you may not have a mortgage that much, and again, you may have a mortgage that is more than that. But let's just use that average number. All right, and then let's say that your mortgage, excuse me, let's say that your mortgage is $3,000 a month. You have a $500,000 mortgage, and your mortgage is $3,000 per month. Let's say that's the average, okay? All right, so over the life of a mortgage of 30 years, for the most part, people they get 30-year mortgage. Of course, that's just about on the average the max. Some people who can afford it, they'll go 25 years or 20 years. Of course, your mortgage will be more if you go less than 30 years, and then less if you go more than 30 years. But not too many companies allow us to go more than 30 years for those of you who may have a mortgage, those of us who may have a mortgage. All right, again, one more time, I'm going to say it again. The average of $30,000, excuse me, $500,000 for this particular house. In the mortgage payment, let's say, is $3,000 a month. Most banks calls it the budget drafting program. The budget drafting program. So what you're going to do when I say pay your mortgage twice a month, I'm not saying to take the $3,000 and pay $6,000 a month, because that's ludicrous for most people. No, that's not what I'm saying at all. I'm saying to take the same $3,000 and pay that twice a month. So you're going to pay that every other Friday. Every other Friday. In other words, you're going to have a half of the mortgage taken out on the first Friday of the month, and then the other half of the mortgage, the other $1,500 in 2 weeks, which is a total of $3,000 you've paid. Now, what have you done? Because we know APR, which is the annual percentage rate, accrues over 30 days. Because you're paying your mortgage every 2 weeks, you're not giving your mortgage an opportunity to accrue over 30 days, but over 15 days instead. And so you're saving that interest rate. The banks does not want you to know this because they're losing money. The banks does not want you to know this because they're losing money. Now, watch this. For those months, some years, uh, 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 there are a month that has 5 Sundays. So for the months that has 5 Sundays, you're going to be making an extra payment. So you're going to make $1,500, and another $1,500 only for the month that has 5 Sundays. And there's some years that have fifth Sundays, and there's some years that has 3 5th Sundays. And so some year you'll be making 2 extra payments. Some years you're going to be making 3 extra payments. There are no years with just 1 5th Sunday. There's no years with more than 3 5th Sundays. So if you finance your home for 30 years, and you're paying for it every other week, every other Friday, for example, or it can be every other Monday, whatever the case may be. It can be every other Tuesday, but as long as you're doing it every other week, every month. And then, of course, like I said, for the month that has 5 Sundays, you're going to be making an extra payment. It's not a lot of them, but it's worth it. Why? Because watch this: over the life of the mortgage, now you're going to pay for your home in 26 years rather than 30 years. That's number one. You're going to pay for your home in 26 years rather than 30 years. That's number one. And then if your home is worth $500,000, you would have saved $97,000. So if you purchased a home for $500,000, and I don't know what APR you have, but if you take that APR and let's say you have a 5.00 APR, you're going to pay an extra $25,000 on that home. So now, because you financed $500,000, you're going to have to pay back $525,000 if I'm doing the numbers correctly. You're going to pay back $525,000 for that $500,000 that you borrowed. But if you pay back on your loan the way I'm saying for you to do, you will save $97,000. Yes, you're going to save $97,000. So you purchased a home for $500,000, right? You purchased a home for $500,000, and then now you're going to save $97,000, and now you have now paid $413,000 for that home, number one. And then number two, you will have paid for it in 26 years rather than 30 years. So that's what's called the the budget drafting program. The banks does not want you to know that. Why? Because they're losing money by you paying off for your home early, number one, and by you getting in this program. So if you call your bank, number one, they're going to try to talk you out of doing it, and they're going to make it sound so scary. They're going to try to talk you out of doing it, but you will just tell them you want to enroll in the program. Now, here's the disadvantage. I'll tell you the disadvantage to the program. Once you enroll in the program, by law, if your bank participates in this program, now you usually can't do that with a business. You usually can't do that with, if you're purchasing a business or if you have a church, you can't do that with business because it's for homes, it's for houses, all right? But the banks does not want you to do this. But if you do it, you're going to pay off your home in 26 years versus 30. And you're going to save $97,000 on a $500,000 home. And then if your home is less than $500,000, trust me, you're going to still save money. Now, the downsides to it, really, there's only one downside to it. What is it? Once they enroll you in the program, if you miss a payment, that's why you should have it drafted electronically. Because if you're sending a check, and you miss a payment or you're late on a payment, they have every right to disenroll you from the program and put you back on the once-a-month payment. They have every right to do that because you missed it. You missed a payment, and they have every right to disenroll you from the the budget drafting program, and put you back onto the once a month program. Now, if you really can afford it, if you really can afford it, and you really want to save a lot of money, you can still get into the automatic draft every 2 weeks program. Remember now, I'm not saying to take $3,000 and you're paying $6,000 a month. I'm saying to take your $3,000 payment, cut it into half, and let them take a half out the first Friday of the month, and then 2 weeks later they take another the half out, which is $1,500, and then they do the same thing that's the next month, and the same thing the next month. But the months with the fifth Sunday, you're making an extra payment. They're going to draft an extra payment, so you got to make sure that the money is there, so they can draft the extra payment. Now, you're saving money in a whole lot of ways. Remember, I just told you on a $500,000 home, you're saving $97,000. You just saved. Also, rather than sending that money out $3,000 one time, you're only sending out $1,500. Imagine what you can do with that other $1,500 until the next payday, or whatever the case may be, particularly for those of you who are military or who have retired military. And for those who are retired military, if you're getting in, let me speak with the state of South Carolina, because you got to check with your state that you're in for this. In the state of South Carolina, if you're getting a VA disability, and if you're getting 100%, you don't have to pay property taxes. So now you're saving even more money. And I'll use myself for an example. I don't have to pay property taxes on my land, 2 of my vehicles, nor my house. I don't have to pay property taxes. So because of the percentage that I have, I don't pay taxes. So I'm saving money again. So you've got to start off by paying the taxes on the house. And then once you start paying the taxes, you've got to go down to the Department of Revenue, and then they will enroll you in the program, saying you don't have to pay the taxes anymore. You take that from the Department of Revenue and send it to your bank or lending agency where you're paying your mortgage, and then they will now take that money off of your mortgage. So now you're saving even more money, because my property taxes are for just the property now, not for picking up the garbage and different things like that, but just the property taxes is $300, almost five. Let me put it like this: almost $400 a month. So now I'm saving over $400 per month times 12 months. That's a lot of money that I'm saving. So I'm saving even more money by doing it like that. Yes, CJ, a lot of people don't use checks these days, but some people still are writing checks. They pay their bills. They're writing checks that pay their bills. And so you've got to check with your state. If your VA disability and you're getting 100% VA disability, check with your state to see what benefits they have for you, because you're 100%. In the state of South Carolina, we don't have to pay for our children to go to college, and they're getting a tuition to go to college, tuition paid, books paid, and they get a stipend of about $1,800 per month, as long as they are enrolled in school as a full-time student. You can't take a class every now and then or here and there. You've got to take at least 2 classes, which is considered full-time, or at least 6 credit hours. And once you take that, you're a full-time student. And as long as you're in school, they're going to send your child or children that $1,800 per month. That is a big help for a student that is in school. And then, they can do what they need to do, or help pay for their car insurance, their car payment, or whatever the case may be, because they're going to school free because you're 100%. And then, of course, I've already told you the state of South Carolina where we don't have to pay property taxes. We can only do 2 of our vehicles. So I have multiple vehicles. So what I've done, I've took the vehicles that are the most expensive. I got a couple of very expensive vehicles, and so I don't have to pay taxes on those vehicles. And then the one that are least expensive, are paid for, in which all of them are. And the taxes are like $100 and something per year. Yeah, I'd rather do that rather than pay $3,000 a year on that Range Rover. I don't have to pay that because in the state of South Carolina, I get to not pay taxes on 2 vehicles and then my house. And then in my case, for those of you who live in a subdivision, if you live in a subdivision, you're paying for your house and land all together. But because I don't live in a subdivision, but I bought land, so that means I would have had to pay taxes on that land. And then I would have to turn around and pay taxes on the house. But I don't have to pay taxes, property taxes on the land nor the house because I don't live in a subdivision. So please be mindful of that. That's a great way of savings, and you're saving a whole lot of money now as well as in the long run. Because as I stated earlier, if you're purchasing a $500,000 home and your payment is somewhere around $3,000 a month, now the payment's going to be somewhere, when you subtract $400 a month, what's that, about $2,600 a month? You're going to pay about $2,600 a month for that. And now you take that $2,600, divide it by 2, and then you do it like that. And then don't forget, on the month with the 5th Sundays, it's an extra payments that they're going to take, but it is well worth it. It is well worth it. So please do that if you're not enrolled. Now, I've said that about the houses, and you can do the same thing with your car, because your car also, you have the APR on the car. Now, some people do the same thing with their rent. Well, I don't know why do that with your rent unless you're just doing it to save money, so you're not paying a $1,200 rent at one time. You will pay $600 here and $600 here, but you're not saving any money with the rent, because rent does not have an APR. So you're not saving any money there. You're not paying anything off early. The only reason you're doing it with your rent is because instead of paying $1,200 or $1,400 a month, you're paying $600 every 2 weeks or $700 every 2 weeks, but you're not really saving anything. But I would so suggest doing that. That way you don't have all of this money coming out of your paycheck at the same time, and then you have some that you can have until the next payday or whatever the case may be, either payday or your retirement check comes or your disability check comes or whatever the case may be. And then you and wifey or husbandy, is that a word? You or your wife or your husband, you put your money all in one nest, right? And pay it off like that. And here is another thing, now this is stretching it, and now most people can't do this. If you want to really save up a lot of money and pay for your house in 22 years rather than 30 years or rather than 26 years, you can make a payment every Friday. Now you're only giving your APR, and I know I'm stretching it now. I'm really stretching it now because let's say your payment is $1,500 every 2 weeks. Well, on those alternate Friday, you can make a payment of $400 towards the principal. Because remember, when you purchase a house, you're not even paying on the house for about 8 years or 5 or 6, 7, 8 years, because you're paying that interest first. And then you're going to start paying on the house. But if you want to start paying on the house early, what you do is you want to quickly pay up that interest, and now you're paying on the house, and you can watch that mortgage go down. You can watch the amount of the house go down drastically, because it's no greater feeling in the world, for those of you who does not know about it or have not done it, there's no greater feeling in the world than to not have a house payment, or to not have a car payment, or have 4 or 5 cars and all of them are paid for. So now what are you doing? You're just paying your insurance. You're just paying for insurance rather than a car payment. I don't know if I have any questions. I'll be checking back on this live to see if anybody put any questions there, and then I'll respond to the questions on the live later on or at a later date. And then again, what's today? Tuesday. I'll probably come back on Thursday and talk about this again. Again, the program for most banks is called the Budget Drafting Program. Your bank might call it something different, but all you do is call your bank and tell them that you want to enroll in the twice a month payment program. They're going to try to either tell you that they don't do it. By law, they have to. If you're talking about a house, they don't have to on your church or on your commercial. Or if you have a business, they don't have to, because it's not for businesses. is for homeowners. It's for homeowners. And so please understand that. All right. And so enroll in the program so you can start saving money. Now, here's the rough part. And I know CJ is still there. So here's the rough part. The rough part is getting into it early, because this is what they want you to do. To start it off, let's say your payment is $3,000 a month. All right. This is August. Yeah, we're in August, right? We're in August. So you might not want to start 1 September. You don't want to start that 1 September, which is Thursday, because they're going to have you to pay September's payment and October's payment. That's $6,000. Most people, I don't know your business, but most people probably don't have the $6,000 to start it off. So if I were you, I would call my bank and I would tell them, excuse me, I want to make September's payment as normal, but I want to be enrolled in the automatic draft program starting in October. So that means you will have made September's payment, and then come 1 October, or the first Friday in October, they're going to draft half of your payment. And then the second Friday, they're going to draft the other half, because you've stretched it out. You stretch it out. But if you want to start it at 1 September, they're going to say, hey, okay, you're going to have to make September's payment and October's payment. And then at that, of course, that'll be $6,000. And I'm throwing numbers out there. But if you tell them you want to pay September's payment, right, but you want to start with the program in October, that gives them enough time to send you the paperwork so you can fill out the paperwork. And then what you're going to have to do, you're going to have to give them your banking routing account number and the bank account number so they can automatically draft you. And you're going to tell them when. You're going to tell them when. And then they're going to send you a notice back and tell you, and they're going to say, we are pleased to inform you that your requests have been processed to have your loan payments automatically drafted from your bank account through the budget drafting program. Budget drafting is a convenient program that may reduce your interest charges, build equity, and quickly and pay off your loan early. You're paying it off early. Who wants to be paying on a house until they're 70, 80, 90 years old? You want to pay off it as early as possible. And then, like I said, sometimes some people run into some extra money, income tax time or whatever the case may be. You want them to go ahead and make the automatic draft as normal, but you can also sometimes call it in and say, on those other Fridays, I want to make a payment on my principal or on the interest, because the objective is to start paying on your mortgage, because we're not paying on the mortgage for about 5 or 6 years. You don't start paying on the mortgage until you've paid off the interest. And then it's still, now that you've paid off the interest, you're paying on the mortgage, but because you're still paying, you're still accruing interest every 30 days. But you don't want it to accrue every 30 days. You want it to accrue every 10 days or every 15 days or whatever the case may be. So now you're saving money. I hope this makes sense to you. If you don't understand something that I've said, watch the recording over again, write a note down, or send me a text or post it on here, and I will check it and I will respond to you. Now let me get to Stocks Out Live with Tim. I'll be back recording pretty soon, probably in another week or two with Stocks Talk. We know the market is horrible right now. Everything is horrible. Gas prices are up. I don't know, while we're talking about gas, if you want to save money, there's an app. There's an app for those of you who does not have it already. There's an app called Upside. It's called the Upside app. Can you see that? It's called the Upside app. And then you could save money by getting the Upside app. If you don't have the Upside app, send me a note and I'll send you a link so you can join under me. And when you join under me, you're going to get some free gas, and then I'm going to get some free gas. Let me give you an example. So on the Upside app, you download the app, and you got a CJ, very good. So you know about it. You download the app, and then it'll tell you the gas stations, and depending on which gas you're putting in, of course, on a couple of my cars, I use the high grade, and then then one or two of the cars the regular. So, for example, today I saved 11 cents per gallon on the regular gas for my Toyota Sequoia, and I think I put like 22 gallons or something like that in today, which was about $65. So they're going to give me 11 cents per gallon back on my app. Now on the app, and I've got a few dollars in there now because I've been doing it for a while. I can either put that money back into my account, or I can spend it at different places. There's a whole lot of different places that you can use the money on your app at Wings places or different stores. I don't see how to get to those places right now. Wings places or different stores. You can use the money. So use the Upside app because it saves money. It can save you a whole lot of money. I think I have like $97 on mine or something like that. So that's saving you money as well. That's what we need to do. Yes, CJ, inflation is horrible. The market is horrible. I think just the other day, what split the other day? I think it was Tesla. I've been busy, haven't even been with other things going on. I think it was Tesla that split the other day on the 25th of August. Tesla split it. And so they had a split. And then so did Google. Google split it the other day as well. And so this month as well. So they split, and so now they got to work its way back up again. So again, if you have questions, shoot me your questions. I'll answer your questions. There are just so many different ways that I know about to help people to save money, to keep some of your money in your pocket, because inflation is horrible. We know that. Groceries, the price of groceries went up, the gas has went up, the lumber, building a house has went up. Everything is just up. So we need to find a way to save money in our pocket. And if you're buying a house, I just told you of a way. If you're buying a car and you still have a car payment, you can do the same thing with your car payment. Now, I'm gonna tell you right now, if you're with USAA, USAA is excited about you doing that. They're one of the ones that they want you to do it. They're excited. They're looking out for the military people. Let me put it like that. Wells Fargo is not as easy to get along with when it comes to that, because again, they're losing money. They don't want to. Their job is to make money off of us. That's what their job is, to make money off of us. And so they don't want you to know about the program, or they're going to try to dissuade you from being in the program. All right. And so my wife is over there making faces at me, y'all. So, but anyway, I'm about to get off here in just a second anyway. But please save money, save money, save money. And when you save it, send me some of it. Thank you for joining me with Stock Talk Live with Tim. I'm Tim McKenzie. Peace.